This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The magic number is 2. The Federal Reserve slashes its rate hike forecast, implying just 2 raises this year as its view of the global economy darkens.
Happy holidays. Yep, you heard right. FedEx had a jolly season, and shareholders may be starting to reap the benefits.
Strange success. The entrepreneur who saw the profit potential in a rundown, abandoned prison. All that and more tonight on Nightly Business Report for Wednesday, March 16th.
Good evening, everyone, and welcome. The Federal Reserve is in no rush to raise interest rates. The central bank held rates steady for the second straight meeting and said it would increase them more gradually than previously forecast. Policymakers say soft global growth and financial market volatility pose risks to their economic outlook. This even as some recent economic data shows some firming. Just this morning, we learned that core consumer prices, which exclude food and energy, rose 0.3% last month. That was more than expected. And the notion that the Fed will delay some rate increases sent stocks higher and bond yields lower. The Dow Jones Industrial Average gained 74 points to 17,325. The Nasdaq added 35, and the S&P 500 rose 11 to its highest level this year. Steve Leisman reports on why the Fed seems uncertain about the economic recovery.
A dovish Federal Reserve kept interest rates unchanged at its March meeting and suggested it would be very cautious about future rate hikes. In fact, the Fed slashed the number of hikes it forecast this year, with the average member of the rate-setting Federal Open Market Committee now seeing just 2 rate hikes this year, down from 4. The Fed gave a fairly upbeat assessment of the U.S. economy and jobs, but was clearly concerned about recent global economic weakness.
You have seen a shift this time in most participants' assessments of the appropriate path for policy. And as I tried to indicate, I think that largely reflects a somewhat slower projected path for global growth.
But Yellen did not rule out the chance of future rate hikes, underscoring that Fed officials have forecast 2 more rate rises this year and said every meeting, including the one in April, is live.
Most participants do continue to envision that if economic developments unfold as they expect, that further increases in the federal funds rate will prove appropriate over time, and that the pace will be gradual.
Of course, Yellen could not escape a question on the heated presidential election and whether it had any influence on the Fed and Federal Reserve interest rate policy.
We are a nonpartisan, independent institution devoted to pursuing our congressionally mandated objectives, and I have never seen political views in any way influence the policy judgments that are made inside the Federal Reserve.
With the Fed not hiking after a strong employment report and 2 months of rising inflation, it remains unclear what it will take for the Fed to raise rates again. The suggestion from Yellen today was if she was less concerned about global growth and had more confidence in rising U.S. jobs and inflation. For Nightly Business Report, I'm Steve Leisman in Washington.
Let's turn now to Scott Minerd for more analysis on the Fed and the economy and what it'll mean for you. He's Chief Investment Officer at Guggenheim Partners. Scott, welcome. Good to have you with us.
Thank you for having me.
Steve just hinted at something, and it is this. Is the Fed remaining true to what it said it was going to do if unemployment did this and inflation did that?
Absolutely not. The Fed is basically violating its own parameters for raising rates. Based on their guidelines, the data dependency, we should have increased rates today. But they chose not to because I think they realized the market would have had a tantrum if they had raised rates. They were not expecting it.
Ms. Yellen pointed to economic uncertainty overseas specifically, but that really falls outside of their mandate as well. I mean, they should be, according to many anyway, they should be regulating rates based on the U.S. economy versus the global economy. Others would argue, however, that it is one economy globally.
Well, I think that the Fed gets its get-out-of-jail card here by basically saying, look, if the U.S. market goes into turmoil, if we raise rates, if the dollar strengthens, that will cascade into the emerging markets and to other countries, which then will create more financial stress in the United States. So at the end of the day, we really are thinking about the U.S. economy.
There are critics who said that the Fed should have raised in September, and they cited the global situation, global turmoil at that time. Then again here in March. How many times do you think they're going to start playing catch up, or did they basically telegraph that they're going to go at a very slow pace, maybe 2 hikes this year, June and December?
Well, I think they're going to go very slow. I don't think they're going to attempt any catch up. I think the expectation which they set today, which is that they'll do 4 rate increases in 2017, will not be met. They will go slower than that. And as I've likened it earlier today, this is like going to the bar, and it's you're having a good time, and it's now closing time. And so we've decided to extend the hours of being open. We're going to keep serving up the liquidity, and the good times are going to roll.
One of the issues for the Fed has been the lack of inflation, and a lot of that has been linked to declining oil prices. You don't think we've quite hit bottom yet, but you are looking for substantially higher prices later in the year.
That's right. If you look at our target, which we think oil will be somewhere between $40 and $50 at the end of the year, based upon that, just the stability of oil and the modest rise in oil, that we'll see inflation tick up significantly over the next 6 to 12 months, and that will be a problem for the Fed.
Where can I make a little money this year, Scott?
Well, you know, the place today, based on what the Fed did, told us that it's okay to take risk, and so my favorite place right now is in high-yield bonds and bank loans.
High-yield bonds and bank loans. All right. Scott Minerd, thank you very much.
Appreciate
you being here.
Scott.
Appreciate it. Guggenheim Partners, Scott Minerd.
Housing starts rebound, hitting their highest level in 5 months. That happens as builders ramped up construction of single-family homes. The Commerce Department reports a more than 5% increase in February, which some economists attribute to the warmer-than-usual temperatures.
The slump in energy prices weighed on U.S. industrial production, broad gauge of output across factories. Mines and power plants, factories. Federal Reserve reports a decline of 0.5% in February from the prior month. Much of the weakness was concentrated in the mining sector and utilities. Manufacturing production increased for a second consecutive month.
Federal Express, FedEx, is often considered a barometer of the economy, and they topped Wall Street's earnings estimates. A surge in online shopping during the holiday season, from people like me, helped drive its ground business. The shipping company reported fiscal third quarter earnings of $2.51 a share. That was better than the $2.34 expected. Revenue of $12.7 billion was also better than estimates and 8% higher from a year ago. Investors liked those results, sending shares higher in initial after-hours trading. Morgan Brennan has more on FedEx quarterly results.
FedEx delivering a beat on its peak holiday season quarter and narrowing full-year guidance to the upper end of a previously cited range. The #2 U.S. package delivery company crediting its better-than-expected results to yield management efforts, something we've seen playing out in its Express segment, which it has been restructuring, as well as U.S. domestic volume growth, or basically more packages being shipped around the country. Also helping the bottom line, lower fuel costs and more favorable currency exchange rates. Basically, FedEx saved money last quarter and, for the most part, was more efficient. The one area where there were some hiccups, the ground segment, which, thanks to stronger than anticipated holiday season demand, saw package volumes and package sizes eclipse the company's expectations. That sent sales soaring, but the higher costs also put pressure on that segment's operating results. Overall, however, a strong quarter for the parcel carrier, the reason shares have taken to the skies in after-hours trading. For Nightly Business Report, I'm Morgan Brennan.
In Washington, President Obama nominated Merrick Garland to the Supreme Court today.
For a judge to be worthy of such trust, he or she must be faithful to the Constitution and to the statutes passed by the Congress. He or she must put aside his personal views or preferences and follow the law, not make it.
The 63-year-old judge is the chief judge of the Federal Appeals Court in Washington. Much of its caseload has focused on regulating government agencies and on national security. Legal experts say Garland's rulings over the years have favored government regulatory agencies, including the EPA and the SEC and the National Labor Relations Board. Senate Majority Leader Mitch McConnell has vowed to block the nomination.
In the race for the White House, the leading candidates all have different plans for defense spending. Some want more, others want less. But as Jane Wells reports, no matter who wins, the Pentagon is arming itself for change.
Our military is in a very bad state.
Such a statement would lead one to think a Trump win would be good for the defense industry. But maybe not. Trump has said he wants more for less, something the Pentagon was already trying to do, but never with a commander-in-chief known for the art of the deal.
I'm going to make our military so big, so powerful, so strong that nobody, absolutely nobody, is going to mess with us.
Thank you all so very much.
Meantime, Democratic frontrunner Hillary Clinton has yet to outline a defense budget, merely promising on her website to ensure the U.S. has the strongest military the world has ever known. Opponent Bernie Sanders previously said he'd like to cut defense spending in half and reduce the size of the U.S. nuclear arsenal, though he reportedly still supports the very expensive F-35 program because of the jobs it brings to his home state of Vermont. This week, the CEO of the company which makes the F-35, Lockheed Martin, addressed the media about the company's future in uncertain political times. But most of Marilyn Houston's talk had nothing to do with the U.S. There was no mention of the election. Instead, Lockheed is focusing on international sales, and perhaps with good reason.
Currently, military spending is about 3% of total GDP. Now, that's a percentage that's less than half what it was during the Reagan administration. It's even lower than what it was during the Carter administration. And the only vocal proponent of raising that percentage, who's still in the race, is Republican Ted Cruz. The Texas senator reportedly wants to increase defense spending to 4% of GDP, adding another $100 billion. John Kasich has proposed a similar spending increase and also highlights the need for more cybersecurity. Cruz, though, is the most specific. He wants more troops, more ships, more missile defense. But at the same time, he wants to audit the Pentagon to follow the money, something that also interests Donald Trump.
We don't win with our military. We can't beat ISIS.
If he can strike a deal to buy more for less, it could be a win-win. It's not impossible. The Russians and the Chinese are building up their military strength for a fraction of the cost. For Nightly Business Report, I'm Jane Wells.
Still ahead, tensions flare in the entertainment industry, and it's consumers who watch TV who may feel the heat. The Federal Communications Commission is reportedly close to approving the $55 billion takeover of Time Warner Cable by Charter Communications. As first reported by the Wall Street Journal, certain conditions will be attached, including increasing the number of families who receive high-speed internet service. A draft proposal approving the merger reportedly will be circulated this week.
As the television landscape changes, it is pitting content providers against content distributors. Two high-profile battles are currently underway. Comcast-owned NBC Universal is in heated contract renewal talks with Dish Network. And Comcast, which is also a pay TV provider, has been in a contentious dispute with the Yes Network over programming fees. And as Julia Borston tells us, it's consumers who are stuck in the middle.
A contract renegotiation between Dish and NBC over the fees the satellite company pays for content has gone south. And now Dish is suing NBC for breach of contract.
Dish says customers can watch everything.
After NBC launched this campaign telling Dish customers they could suffer a blackout of NBC's 26 channels as early as Sunday, Dish said involving the public violated NBC's contract.
The cable and satellite providers like Dish are under increasing gross profit pressure because it's getting harder and harder to pass price increases along to consumers. And that's partially because the price is already so high, and it's partially because everybody already upgraded to HD and DVR, so you kind of can't mask the fees anymore.
Dish says it expects to file for arbitration, which would prevent NBC from blacking out Dish customers. And NBC says it welcomes arbitration and believes it would win. This lawsuit speaks to a bigger issue, growing debate over the value of content to satellite or cable TV packages. This comes after Comcast dropped the Yankees' Yes Network in November after the two failed to reach an agreement. Alex Rodriguez recently filming a video urging Yankees fans to drop Comcast.
So if you're a Comcast Xfinity customer, you will not be able to watch any Yankees games on Yes this season.
And while Yes is unique because it's such a niche network, this is just the beginning.
And I think we will see at some point over the next 12 months, maybe it's a little bit longer than that, but we'll start to see big channels get dropped. And the outcome from these, I think, will get more and more severe.
Hargreaves warns that content companies' push for higher fees, which are passed along to customers, is likely to drive what's called cord shaving, customers choosing smaller, less expensive TV packages. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Comcast is the parent company of NBC Universal and CNBC, which produces this program.
Peabody Energy warns it may have to file for Chapter 11 bankruptcy protection, and that is where we begin tonight's market focus. If Peabody proceeds, it joins a growing number of coal producers who recently filed for bankruptcy. The company's been hit hard by low energy prices and the continuing shift away from coal power plants. Shares of the company down more than 45% to $2.19. Two solar energy companies announcing today they are delaying the release of their 10K financial report for the second time. Both SunEdison and Terraform Power cited, quote, material weakness with their financial reporting as the reason for the delay. SunEdison ending the day unchanged, $2.08, while Terraform dropped nearly 8% to $9.72. Amgen wins a patent lawsuit decision against Regeneron Pharmaceuticals and Sanofi. The suit revolved around a new type of cholesterol-lowering drug that Amgen had initially developed. Amgen up a fraction to $143.98. Regeneron also a little bit higher, $368.46. The close there. Sanofi dropped nearly 1% to $40.76.
Caesars Entertainment and its private equity owners could be facing up to $5 billion in potential damages after a court examiner said a series of corporate deals led to this casino company's operating unit filing for bankruptcy. The bankruptcy court had been looking into whether the company and its backers stripped away assets, leaving the unit unable to pay its debts. Shares of Caesars Entertainment were down more than 13% to $6.23. Apple has responded yet again to the FBI with a court filing last night, further entrenching itself in the privacy battle against the government. The tech company claims that the FBI has not exhausted all options to unlock the phone used by one of the alleged terrorists in the San Bernardino attacks last year, and it maintains it will not develop a backdoor into its mobile operating system. Shares of Apple rose more than 1% to $105.97. Retailer Williams-Sonoma reporting weaker than expected fourth quarter earnings after the bell today, as well as lowering its full year guidance. The company did, however, raise its dividend and authorize a $500 million share buyback. Shares initially fell in extended trading after gaining more than 2% during the day to close at $59.46.
Virtual reality could redefine many businesses, but none more so than the $100 billion video game industry. So it's no wonder that many tech companies are trying to capitalize on this opportunity, which comes with its own set of unique challenges. Josh Lipton reports from one of the world's largest gaming industry events.
Virtual reality is the shiny new toy at this year's Game Developers Conference in San Francisco, and in less than 10 years, VR video games could bring in nearly $12 billion in revenue, according to Goldman Sachs. Now, that kind of money has tech companies fighting hard to win over gamers. Sony announcing that its PlayStation VR system will be available in October for $399.
we are on the cusp of what will be a brand new form of games, a brand new form even of storytelling. And that's going to be a very, very long road.
Now, Sony does have plenty of competition. Facebook's Oculus Rift, which ships on March 28th, is priced at $599 and includes 2 games, remote, and an Xbox One controller. Also at the high end is HTC's Vive, priced at $799, and a lower-end headset from Samsung retailing for about $100. But it's developers who are now going to help drive adoption of this technology. They now have to create compelling games, which does come with its own challenges. VR, if not designed correctly, can make users dizzy.
As a VR designer, I have to spend at least 50% of my time focused on both performance and comfort. So I don't have the luxury of purely focusing on designing mechanics. And that's because if you make someone sick in VR, you can ruin their whole day.
Developers also say that creating VR games can be a lot more expensive than designing traditional titles. Still, they're convinced that this technology will upend and redefine the industry. Developers say it's too soon to tell which tech titan is going to lead this expected revolution, but they do say it's going to come down to which company offers them the best and easiest tools for making games accessible to the most people. For Nightly Business Report, I'm Josh Lipton in San Francisco.
Coming up, from prison to play, how a former correctional facility was transformed into a profitable business.
Major automakers are expected to announce tomorrow that they have agreed to install automatic emergency braking systems in most U.S. vehicles by 2022. According to Reuters, the final deal follows an agreement in principle with safety regulators that was reached last fall. The automakers include Toyota, GM, Ford, Fiat Chrysler, Honda, and Volkswagen.
Entrepreneurs have big ideas, but it takes a certain amount of vision to see the potential in a rundown, abandoned prison. Kate Rogers has the story of a man who saw an opportunity beyond the barbed wire.
No, we're not in a prison. At least not anymore.
When you hear the door gates lock, it's okay, I'm in here now. And we're going to work hard, we're going to work smart, we're going to believe in what we're doing, and then when we get a chance to leave, we're going to leave all our doubts behind us.
Up, down.
I was a New York State prosecutor for many years. I put bad people in jail, and then I represented criminals. So how apropos is it that now in 2016 we're sitting in a prison?
You were meant to buy the prison.
I guess so, possibly.
These rolling 38 acres used to be part of a correctional facility in Warwick, New York. But today, the property's being turned into, of all things, a successful athletic facility and fitness center called The Yard. The concept was created by entrepreneur Tony Abatini. To open The Yard, Abatini drew on his experience as a Major League Baseball consultant, as well as a turn running Frozen Ropes and national franchise baseball and softball program.
I was the logical choice to come here and see the property. And my first gut reaction, Kate, was I'm walking into a prison. I mean, the razor wire was all over the place because it was such an overwhelming sight initially. It took 4 visits before I realized, okay, I see the light.
Okay, so you saw the light, and then what? You decided you were going to buy it?
You just do it. You just hold your breath. You talk to people, but it really gets down to your gut. It's that divine intervention. It's that one moment when they walk into a place like this and they say, yeah.
Tony's vision has worked out for him. Since opening last year, The Yard is already profitable and has hosted nearly 500 teams for tournaments and even prison-themed athletic classes.
Keep moving, keep moving.
I'm dying down here. Can I sit this out?
No, you got it.
This is a passion that I've always wanted to do. And I think a lot of people are afraid of that, you know, because it is scary. You kind of go through that uncertainty, and then you wake up in the morning and you say, you know what, if this is what you believe, if you work really hard and you focus on what needs to be done, yeah, that's what entrepreneurs do. They don't spend a lot of time thinking about the what ifs.
For Nightly Business Report in Warwick, New York, I'm Kate Rogers.
think one of the exercises they should do, Sue, is the escape exercise.
Yes.
It gets out the fastest there.
But go, you go, Kate. You go.
Yeah, go, Kate. Before we go, let's take another look at how stocks closed after the Fed's decision to keep interest rates standing right where they are. The Dow Industrial's up 75-ish at 17,325. NASDAQ up 35. And the S&P 500 at 2027. That's an 11.5-point gain or thereabouts.
And that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching, and we want to remind you this is the time of year your public television station seeks your support.
And I'm Tyler Matheson. Thank you for your support. Have a great evening, everybody, and we'll see you tomorrow, St. Patrick's Day.
Oh, wear green.
Yes, I shall.
Wear a green tie.
I shall.